Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. All right, Snowflake, ticker symbol is SNOW, S-N-O-W. Investors got rewarded pretty well today for holding on to Snowflake through their earnings and their dip there before earnings. So you can see they've been in a, oh, let me fix the chart here. There we go. They've been in a really nice trading channel, ascending trading channel here. Dipped out of it in the beginning of October, but then get right back into it. But then they ran into a little bit of selling pressure here going into earnings. The company was a little bit richly valued when it had popped above its trading channel right here in the middle of November. And then it really just sank and it dropped. We had a 10% drop, a 7% drop, and then a 9% drop, relatively close together. So it had fallen pretty well. But today, 15.8% is what it was up during regular session hours, and it's up another 0.5% in after hours. So here's my thoughts on Snowflake, all right? Snowflake, ticker symbol SNO, is finding itself in a winter wonderland after posting its first profitable quarter since going public in September of last year. In Q3, the company reported positive EPS even as analysts predicted another quarter of net losses. That's why this quarter was so important and amazing for Snowflake. It was Snowflake's wildest beat since its IPO last September. In further good news, Snowflake yet again doubled its its product revenue year over year, and it also expects Q4 product revenues to nearly double at 94 to 96% growth. That is incredible growth for a company. Now, Snowflake made a bold claim not too while ago, maybe a few months ago, maybe a couple quarters ago. I can't quite remember now. I did a video on Snowflake back then, but they were betting on big growth, and they came out with a statement about it. And well, they're backing it up with this quarter. The cloud-based data analytics company was under quite a bit of pressure to deliver on an excellent quarter given the latest market sell-off of high multiple stocks. Now, Snowflake is trading at 77 times fiscal year 2022 sales. It has not been exempt from that action. This ultra-rich valuation was a significant factor in the stock's recent snowballing, giving up about 22% of its value since hitting 2021 highs in mid-November. That's when it popped up out of its trading channel. Even without a rotation out of high multiple stocks over the past few days, Snowflake was still priced to perfection, making its Q3 results all the more impressive. The biggest standout in Q3 was Snowflake's profitability. The company posted adjusted EPS of 4 cents, crushing estimates. Snowflake was on a path to profitability heading into Q3, as it had posted narrower losses in every quarter since its IPO. So it was nice to see the company finally deliver positive earnings in this period. A lot of this has to do with how Snowflake charges its customers. Being a cloud-based company, Snowflake employs an approach that differs from the software as a service or SaaS model. The company uses consumption-based model through which customers purchase credits based on their requirements. Snowflake has continued to increase the price of its credits, driving robust product gross margins of 74.6% in Q3. Profitability was also helped by tremendous revenue growth. In Q3, Total sales leaped 109.5% year over year to $334.4 million, making the fifth straight quarter of triple-digit revenue growth. Product revenues followed suit, jumping 110% year over year to $312.5 million. A major component of the consistently strong revenue growth is Snowflake's ability to continually add high consumption customers. In Q3, the company saw its largest sequential net additions of customers, generating trailing 12-month revenue of $1 million or more so far in fiscal year 2022, taking on more than 32. Furthermore, 8 of these customers consumed over $10 million. Looking ahead, product revenues of 345 to 350 million, or 94 to 96% growth year over year. The primary reason for the minor slowdown in growth is a gradual return to normalcy throughout the global economy. Although the Omicron variant puts a slight wrinkle in a global path to normalcy, Snowflake noted that in Q4 last year, many of its top customers experienced massive growth, while online shopping and shelter in place were more prevalent than it is today. As of right now, the Snowflake results they expect to be a greater impact on consumption in Q4 compared to last year. Overall, despite trading at sky-high valuations of 77 times fiscal year 2022 sales, Snowflake's profitability, its repeated doubling of revenue, and its significant uptake in large customers in Q3 were more than enough to help the stock experience a solid bounce. When it comes to Snowflake, investors have to be incredibly forward-looking. However, as companies are accelerating their digital transformations while relying more and more on data operations and analytics, Snowflake's future looks anything but cold and dark, like a blizzard that it skipped and passed by. All right, that's Snowflake. What do you guys think of Snowflake? Do you think it's a company worth investing in with these high valuations and these crazy growth numbers? Or is this one just a little too rich for your taste? Let me know in the comments. Thank you for watching this segment from the After Hours Show. If you want to watch it live, then join me on this channel every day the market is open around 5 p.m. for the latest stock market news, deep dives on your favorite ticker symbols, and most importantly, answer your questions. Make sure to click the like button and share this video with others so we can all reach financial freedom. Thank you so very much for watching, and I will see you in the next video.